Hello and welcome to another Smaulgld live stream. Tonight is Friday night, October 26, 2018. Tonight's topic, silver hoarding on the rise. We're going to talk about all those big silver stockpiles getting bigger. First, take a look at what happened in our gold and silver markets. Today was another down day on Wall Street. And I would have expected, given that it was the second one, that we might have seen a rebound in the gold and silver prices. And we did somewhat see that early on. And I'm going to show you the chart here. So we opened up around 1232. The price did go up to, after the market opened, early morning up to $1,243. But then it looked like it was treated to a little bit of a smash down, and for no apparent reason, because one could argue maybe what was happening was the stock market had fallen significantly, and then the gold price immediately at the open rose, and then I guess what happened during that time period, but not as fast, was the stock market did try to rally back. Now, it didn't rally back all the way, and then it fell back down towards the end, and somewhat you can see the straight rise up at the open up to 1243, and then as the market rallied back, almost a straight drop back down. You can see where gold fell back almost to the point of no gain and only barely eked out a gain, even though the stocks did not recover their entire ground. In fact, the Dow Jones fell 1.19%, a total of almost 300 points. It's below that 25,000 mark. It's at 24,688. NASDAQ had another huge price and percentage loss, down over 2%, 151 points down. And S&P was down almost 50 points, down 1.73%. So gold, I would have expected to do a little better today, but only up 0.14%. In fact, gold's performance was so underwhelming that even our friend silver outperformed it. Not by much, but it doesn't take much for silver to gain 0.42%. It gained 6 cents today. But again, you see the same type of price movement where silver had its run up. It opened to 1462 a while back. And then you see at 8 o'clock in the morning, it drove up. It drove higher from about 1457 at its low, and then it rocketed up to about 1475. And I thought, well, that's a good sign. But then you see it fell back down around noon, and then did rally back a bit, but only closed up 6 cents. So up 0.42% on the day, even though it had significant down. What does that do for the gold-silver ratio? Well, since silver did a little better than gold today, we closed at 84-1. Not bad. Still well above what a lot of people think is a normal ratio, although you know my view on that. I'm not that disturbed about the gold-silver ratio being where it is. I kind of expected that and have been talking about it for 5 years. And it's gone up over those 5 years, while many of the silver pumpers have been insisting unsustainable. Now, another thing that we've been tracking before we get to our topic and some more charts is we've been tracking pretty much every night now the Dow gold ratio, and I want to show you where we are now. We started tracking that almost around the top, around 22-1, and now we're down under 20-1, and that is a result of gold rising and the Dow falling. This is not through today. This is through yesterday. We're about a day behind every time we look at this chart. But again, we'll check it out again tomorrow night. We should be below 19 even again tomorrow. But 19.997-1. And you can see to the far right of the chart, the blue line, we're heading back down. Now, if you look all the way back to early 2016, you can see we were under 13-1. So a long way to go. There's people who track this chart, and they like to say when they get into single digits, that's when it's time to sell your gold and swap back into the Dow. So if it got 1-to-1, that would mean that, if gold was at 24,000 today, you might be thinking about selling your gold and moving it back into stocks if it was at a 1-to-1 ratio. All right, we'll keep track of that. Just a review from last night. We had a small crowd. I don't know what happened. We didn't get many. It was a short show. I wanted to follow up on some of the topics we discussed on Wednesday night when we had a full house. But one of the things we talked about that night was the gold price versus other currencies. Last night we did that, and we went through. It's actually a good show because if you go to the Smaulgld.com website, you can see all the different charts of how gold is doing this year versus a lot of currencies, and it's basically up in most of them. It just happens to be down because the dollar strength has been so strong. Well, I forgot to mention last night the gold versus the Venezuelan bolivar, and that's just a long-term chart, and there you can see how ridiculously worthless the bolivar is. Obviously, if you held silver, gold, or even Smaulgld Mugs, you'd be better off than holding the Venezuelan bolivar. So there it is, the gold in Venezuelan bolivars. And one other thing, I know what it was from the other night. I come up and I've been using this analogy when people talk about gold is money, period, and they argue with me as if when I say it's not money because it's not used as a currency, although it could be used. It's just not a medium of exchange, although it could be. That's not to say gold isn't valuable. Gold isn't a store of value. Gold isn't a store of wealth. Gold doesn't have unique properties. Gold isn't beautiful. Gold isn't in demand for jewelry, etc., etc. It's just that gold is not money in the traditional sense that it has been for 5,000 years. And I've been using the analogy of the horse. In 1870, you might have said horses are transportation, period. And then you argue that horses will always be transportation. That's how you get from point A to point B. That's how people have got from point A to point B for 5,000 years. However, horses today are no longer transportation, period. Horses are now used to ride around in circles, and people bet on them. People have them as pets. Horses are still valuable. Horses are still beautiful. Horses still have fantastic properties. And you could, if you wanted to, go from point A to point B on a horse, just as you could, if you can find somebody willing to take your gold coins, use gold in a transaction. Doesn't mean that gold and horses can't be transportation or money. It's just that they're not. And the reason for that is technology has moved past gold and silver. And a lot of people cringe, oh, no, gold has always been money. Gold will always be money. No, it's not money right now. It's a very valuable element. And central banks hold it as a reserve, but they generally don't use it in transactions. They could one day again. And one day, again, we could use horses as transportation, depending on our energy needs. Now, another one I thought of, and then we'll move on to our topic for tonight. A few other things are candles. Candles used to be, and whale oil lamps were how you lit your housing and your abodes. That's what you used. Candles are lamps, period. That's what it was. Well, people don't use candles and whale oil lit lamps anymore. They can still be used. You're feel free to go out and buy a bunch of candles and put them all throughout your house and put them out at night before you go to bed. You can use candles to light your house. No two ways about it. But here's the common thread. Candles, horses, and gold are no longer used primarily for their intended purposes. Candles are now an emergency item. Why? We have electricity. Gold could definitely be emergency money if we went out of electricity, if the banks failed. So gold and candles are prepper items. And I would say if you had a horse, you'd be very well prepped as well. You can go somewhere. You're not just stuck at home with your gold and your candles. You've got a horse. Throw into that pens and pencils. They're writing instruments, period. Not really. I would say most of the words written today are not written on pen and paper, with pen and paper or pencil and paper. How do we write? We write online. We type digits, digital illusions onto a screen. So pens and pencils are not the only writing instruments, period. Candles are not the only way to light a house, period. Gold is not money, period. And horses are not transportation. All right, enough of that. I just thought that that's another way of putting it into perspective. I mean, people are very emotional about it. When I say gold is not money, what are you talking about? You don't understand monetary history. No, it's because I understand monetary history, general history, that I say gold had and still does have all of the elements of money, except the one that it's a medium of exchange. It is not. Silver is not a medium of exchange. Could be. And if there is an issue with our electricity, EPG, banking crisis, well, we can't use our digital money or our cash, then clearly they would regain that status. So would horses as transportation, so would candles as being a form of lighting up things, and so would pencil and paper, or even sticks and blackboards and things like that as the way that we write. However, we have moved into a digital age. You can complain about it. You cannot like it. I don't like it. I prefer the older ways. I prefer vinyl records. But that's not the point. Let's go now to our topic of the evening, which is this silver hoarding. Lots of silver hoarding. Now, we've been covering the COMEX warehouses, the amount of silver that's in ETFs, and those are big, big hoards. And the reason they're important, forget COMEX default, that's just a silly story, just like JP Morgan has silver. Those are unfounded stories. They're there. I don't know why they're there, but they're not true. But what is true, or at least, well, you got to be careful here, is supposedly there is all this silver being stored at COMEX, and there's all this silver being stored at ETFs, and it's there to back these products. Now, let's assume that silver is there. The reason I want to assume it's there is because that silver is increasing in amount. So the first thing that we were looking at is, let's take a look at the silver ETFs. Now, this is a chart that I compared. We're not going to do it tonight. I've compared it to the gold ETF demand. The gold ETF demand, or the amount of gold inflows that go into these ETFs and stay in these ETFs, has generally tracked the price of gold. So when the price of gold goes down, people sell off their gold ETFs, and the gold flow supposedly comes out of the ETF. And when the price rises, people buy the gold, and it goes back into the ETFs. What's happened with silver has not been that case. Silver has been increasingly hoarded into these ETFs. And it's not just SLV. You can see that's the big mass of light green at the bottom, but you can see the black line, price going down, but that's not stopping people from dumping silver into the ETFs. Now, a lot of people say, well, that silver's not really there. Again, that's a conspiracy theory. I'm not sure that's true, because if you look at the lines, it would have to be that every silver ETF doesn't have the silver, because they all seem to be putting silver in at the same pace. And it would have to be, it's one thing for one ETF to get away with faking their silver in there, but for all of them, I don't think that's possible. I mean, you got Sprott there, you got Deutsche Bank, you got Brompton, Julius Baer, you got the ZKB funds. I doubt that they're all they don't have silver in there. And it makes for good copy to tell there's no silver there, just like it's nice to say there's no gold at Fort Knox. It's a good pumper story. It makes you think that, whoa, what if they ever find out that there's no silver or gold at Fort Knox? Silver and gold set to skyrocket. Yeah, okay, I get all that. Anyway, I believe that there's silver in these products and that the amount is increasing. And can I prove it? And you can't prove they're not there. I tend to think that the silver in the Sprott fund, which is that pink line, is there. People do get redemptions out of there. Do they play games with the silver that they put in there? Probably. I'd imagine that there's fraud that goes on anytime that there's 600 million ounces of silver in any one place or any bunch of places. Sure. But I think for the most part, this chart is probably directionally correct that there is 600 million ounces of silver. Now, that's a pretty big deal, because when they first started this stuff back in 2006, there weren't these big piles of silver held for investment. The amount of silver that was held for investment was in people's in India's drawers. It was in their silverware. It was in silver coins, silver eagles, but it wasn't in these bars held in the ETF. So that's just the silver ETF demand. But I've got some more charts that show you a bit more, that include more than just silver ETFs, but other silver products. And let's take a look at the 20-year holdings of some more silver products, not just ETFs. This will include bullion vault, we'll call silver bullion. It'll include different funds. It also includes the COMEX. Now, the COMEX is the blue line at the bottom there. So this includes more than just ETFs. It includes silver held at the Perth Mint, a whole bunch of places. Well, this amount of silver, mutual funds, repositories, and ETFs, that last chart showed you about 600 million ounces. This is over 1 billion ounces. This is 1,030,000,000 ounces. This is a lot of silver. But again, the interesting thing about this chart is it just goes up. There's no, especially it's been going up since 2017. You can see how it went up. Now, 2011, it's not that high. I mean, we've gone from about 750 million ounces then all the way up to almost 1050. And if you look at the gold one in contrast, the gold ETFs peaked when the price peaked. Silver, they keep adding to their holdings. And again, this isn't just ETFs that are increasing. This is, you could see, the COMEX has also, since 2017, go to the bottom blue. That's gone from about 150 million ounces to 300 million ounces. Part of that's BRINKS, part of that is JP Morgan. We're going to take a look at theirs as well. Lots of silver being stockpiled, not because the price is rising, probably because the price is decreasing. Look at that. A lot of this gain in this chart, this slope higher, really starting in 2016. This is a big, big increase in silver being held in ETFs, mutual funds, COMEX, and other depositories. Let me show you now another chart. These are from Nick Laird's Silver Gold Charts Are Us. Here is the 5-year holdings. You get it's not as dramatic looking, but it's a pretty big deal because you can see from 2016 going from 800 to 1050. And again, they're all broken down there. COMEX at the bottom. Just another way of looking at it. It's not as dramatic, but you can see that they're heading higher. And we did have a little bit of leveling out from 2014 to a drop in 2016, but then we've been heading higher, and that's a pretty big deal, I think. My opinion is it's what you would call smart money, because this is investor money. This is silver held in investment form. This does not include silverware, silver for solar panels, silver for electronics. This is investment grade silver. And they don't include this silver when they do supply and demand. Very, very interesting. So when we see the silver sales at the U.S. Mint falling down since 2016, we have to be careful to note that silver demand, it's taking the form of these products. Again, this is digital, but presumably that silver is indeed there. Now, speaking of the U.S. Mint, there was no increase. Hasn't been any increase the last, I'd say, week in the reporting. So they're still at 1,030,000 American Silver Eagles through October. So that little spike we had at the end of August all through September pretty much fizzled out the first week of October. We haven't had any more increases in American Silver Eagle sales. By the way, if you're interested in buying American Silver Eagles, you can do so through the Smaulgld site. It's not advice to do so. It's certainly not investment advice. But if you're going to do so, please you can check out SD Bullion. I'm giving you a link. Smaulgld makes a small commission. It is a way to help out the site and help yourself out. They got some specials going on there. You could check them out. And Money Metals Exchange is another decent bullion dealer you can check out over there. And as I mentioned, Smaulgld gets a small commission if you do indeed buy and you add to your stack. And you can also check out Golden Eagle Coin. They also have interesting coins. The ones I like the looks of, they have a Litecoin and Bitcoin silver round. So you actually get a 999 silver Litecoin or a silver Bitcoin. They have them in pretty much like 8 or 9 of the different cryptocurrencies. They're a little bit of a premium, but not much. I mean, I think they're decent collector's items. So please check them out. All right, let's move on now to some more charts. I want to show you more of this hoarding that's going on. So you saw the 20-year, you saw the 5-year, you saw the ETFs. Let's go over to Shanghai. Let's go to Shanghai Gold Exchange, which a lot of people don't realize have silver. They have a robust silver trade over at the Shanghai Gold Exchange. This chart is showing you the withdrawals. And again, you could go back 12 months ago. All you got to see is the open interest is lower 12 months ago, and the open interest is much higher now. But then if you look at your delivery volume, you can see that that's headed higher too. The daily delivery, look at that to the far right, the bottom black line's heading higher. 51 tons delivered just in a day there. You could see just in mid-September, over 250 tons. So you're seeing a lot of silver trading, lots of silver hoarding. You may not be seeing it at the U.S. Mint, but it's clearly going on. Now, speaking of trading, let's take a look at our friends at the JP Morgan Silver Vault. Now, we were tracking this, and you know, I place no credibility whatsoever in the JP Morgan has silver story. The only silver we can attribute to them is the silver that they say they have in their vault, which could be held on part of clients. And I don't believe they own this silver for their own benefit, and they're going to let it ride, and then they're going to sell it. But anyway, this is silver that's held in the 1,000 ounce good delivery bars, 999 silver at the COMEX approved vault. Some of it's available for sale, other of it's just sitting there waiting to be available for sale. But apparently this vault, which is now at a record high of 147.892 million ounces of silver, experienced a bit of a dip in September. As the price was dropping, silver was leaving the vault, and they went from about 145 million ounces down to about 139 million ounces. You can see that little dip to the far right up at the top. But since October, they've added back about 8 or 9 million ounces. So JP Morgan's silver COMEX vault has swelled to 147.892 million ounces. That is a record. However, it's not just JP Morgan. Do you think BRINKS is also buying silver and stacking the shiny and going to let silver ride? No. This is smart money. This is money held on behalf of clients. Look at that big increase on a percentage basis, far bigger than JP Morgan's. Back in July of 2016 or earlier, they had about 18 million ounces in their vault in the 1,000 ounce silver bars. Well, now they have 50.54 million ounces in the last month alone. Look at that. You can hardly see it to the far right. In September, they had 43 million. You can see the line goes straight up to along the side there. You can't really tell. But look at the total BRINKS silver stockpile. 50.54 million ounces. 36 million of those are registered for sale, and 14 million are good to go if you wanted to take delivery on them. So big increase in the BRINKS. Now, BRINKS, many of you will recognize the name, they're a storage facility. They've got more than 50 million ounces at their vaults. They also have silver in the form when people send them their silver for safekeeping. You can send monster boxes of silver. You can send silver bars. This only represents that silver which is available for trading on COMEX in a pre-approved or pre-assayed 1,000 ounce silver bar 999. I don't know what they have, and they don't release what they have in other silver, but certainly there's a lot more silver held at BRINKS and at Viamat and all these other storage facilities around the world. It'd be very interesting to see. The numbers I showed you only showed like Bullion Vault and gold money and mutual funds and COMEX and ETFs. But then there's private stores. I don't know what the Texas Depository numbers are. I don't know what the BRINKS full numbers are for their other silver, for other vaulting companies as well. I imagine they're up pretty high as well. All right, so that's JP Morgan and BRINKS. But let's look at the COMEX vaults collectively. Meaning when you add in JP Morgan, you add in BRINKS, you add in Coins and Things, you add in HSBC, you add in all the COMEX approved vaults. Well, look at that. Now that is a 290 million ounces. Again, look at the big increase from 2006, or just look where it is now. Look at you now. That's a lot of silver, you know what I mean? That's a lot of yayo. That is a lot of silver, and that is being stored. So anyone who's trying to tell you COMEX is going to default because they don't have enough silver or gold, that's nonsense. It's going the other way. Look at that. That is a massive amount. And again, it's not because the price is rising. I think it's because the price is falling. Big, big, big COMEX amounts. Now, remember, let's just go back and look at the other chart. Now you can see at the 20-year chart, there's COMEX again at the bottom. But notice that COMEX, at the bottom of COMEX, is going up at the same pace as the other lines that are going up that represent ETFs, mutual funds, and other repositories. So it's not like, oh, well, they're just putting a lot of silver into COMEX. Oh, they're just putting a lot of silver into ETFs. Or they're just putting a lot of silver into Central Fund of Canada. Or they're putting a lot... No, it looks like they're putting a lot of silver into all of these products. This is a big deal to me. This is a hoard. This is, I mean, look at it. I mean, you can see it. Res ipsa loquitur, the thing speaks for itself. Now, what's interesting is, does this mean silver's set to skyrocket? I don't know. What it does mean is a lot of people have put a lot of silver into storage in the last 2 years. They know what's coming. I don't know if that's the case. Maybe it's just cheap. But it isn't just JP Morgan. This is, you can see, look at it. It's everyone. When I say everyone, any of the trackable places where you can store silver look like they're all heading higher. And gold doesn't look like this at all. All right, well, let's see if we've got any questions or comments over at the on the side there. Oh, we got a bigger crowd here tonight. But let's see what we got. All right. All is one now. I am a silver hoarder. Well, that's good. All right. Then I said, while you're waiting, become a Smaulgld patron. That's always a nice thing. And the link is there. Scott Linner says, I too a sticker am waiting. Am still waiting. I guess he was waiting for the show to begin. Shark Air. Silver has been 1460 for 5 weeks. I don't know what charts you're looking at or whether you've been paying attention. But silver on September 30th was 1420. It got to 1460 immediately. And went down on October 9th down to 1430. Yeah, I guess it's been in the 1460 range. Yes, you're right. It's gone up and down, but it has plateaued. It has not gone higher. Whereas the gold 30-day has gone from 1180 to 1230 and has been at 1230 for about 2.5 weeks, a little higher than that. Yes, well, that's my point. Gold is doing better than silver at the moment. Esper Hunter is joined. De La Ville is here. Shark Air, a Trojan condom is more valuable than the Boulevard. Yeah, well, you see, anything of value, as I mentioned, Smaulgld Mugs, pens, whatever it is, a spoon is going to be more valuable. In fact, someone made the point more than a few nights ago, but it was a good point, and I dismissed it because he said that the coins are worth more. And I said, well, there's very little value in those coins. But then I realized, even if they said whatever number they said on them, there's still metallic value, even at base metal prices. So, for example, an American quarter may only have 4.5 cents. I'm not up on the latest numbers, but I know like a nickel has between 3 and 6 cents, depending on the value of the nickel. Even a zinc penny may have 1.5 pennies. Copper penny, 2 to 3 cents. A quarter, maybe 6 or 7 cents, whatever it is. But still, 6 or 7 cents in Venezuela is better than a fraction of a cent. So even the metal money, which has probably been what I heard, and I saw pictures of this in Venezuela, when you get change, they'll give you matches as like your change instead of the coins, because they rather hold on to the coins. Because when you have hyperinflation, you know, if you have a penny, it's got a metallic value that's pretty stable, and if your currency is deflating against it, you're better off holding on to the pennies than you are, even if it's zinc. It's still valuable more than a match. All right, what happens when the internet goes down, has popular opinion? Well, that's the point. If the internet goes down, gold and silver regain their medium of exchange use. Clearly, you'll be able to, how else are you going to do commerce? I'm not talking about total Mad Max. Then gold and silver is useless. You need your guns and your food supply and things like that. But if you're just talking about a fairly big outage, well, you're going to need to transact, assuming that there's still other things happening. And if you can't use your electronic bank or your ATM, or you can't do a wire transfer, but you want to transact locally, well, clearly your silver is going to come in handy if you have it. And because it's a very good medium of exchange, except today, clearly sending money over a wire or through a phone is a better and a faster medium of exchange. Forget the fact that there's nothing backing it, that it's a digital illusion or whatever. It's easier to transact with cards. That's why people do it. You're not carrying around a sack of silver or gold, making change and stuff like that. You just hold your phone up to whoever's at the point of sale. But if those things go down, as Pablo says, and that doesn't exist, that's when digital money and cryptocurrencies become less than worthless. There's no point in even having them. They don't do anything. You can't even access them. They have no intrinsic value, and they don't work because the electricity doesn't work. Anyway, so silver and gold clearly, and that's when a horse will come into use. And if electricity goes down and internet goes down, that's where candles come in use. That's where pens and paper and pencils become valuable. But in today's world, they're not. They're backups, and that's a good thing. Those are preps. You can call the gold and silver preps. Store of value too. And candles will be worth a lot more if the lights went out, that's for sure. Just like gold and silver will be worth a lot more in a banking crisis. Gold and silver will be worth a lot more if there's an electrical outage or a cyber attack, clearly. But to say that they're money today, they're not. The potential return to money, no doubt. Depends where you live. I like to hodl silver and gold, says Dano. Christopher List, hodl. Esper Silver, where do I find world physical supply by year? I used to do a report myself, but you can go to, let me give you the address. Silver Institute is one of them. There's another one. I think they work with Reuters. Let me give you the thing, and you can see them. And I've charted a lot of this stuff too, but they have an annual report. Let me get you the exact link, and you'll be able to see they have all of the different, goes back to, wow, they have surveys all the way, there's so many surveys. But anyway, you get a lot of data there. One caveat is they show always a deficit. Here's the link. They show a deficit in silver, which I think they must be undercounting somewhere because they have like deficits for decades. And I think the price would have to rise if there's a supply-demand deficit, meaning that the demand outstrips the supply. I just don't see where the extra silver comes from. Their numbers don't add up to me, and I've written to them and made that point. In fact, they did change on one of my requests the silver investment demand for, I think it was 2015 or 16. It was 2015 when I pointed out that they increased their sovereign silver rate, but they didn't increase their generic rounds and bars by the same amount. And I knew that year they were sold a lot. So it's part science, it's part art, what they do. I think what's happening with silver demand is they don't include a good amount of secondary silver because the base metal miners, the gold miners, whatever miners they are, they don't properly account for the silver that they actually produce, and therefore it doesn't get added up properly. And I also think there's a lot more silver. As I mentioned, we don't really know how much silver is in BRINKS. A lot of these companies don't report. We know how much silver may have been sold by the U.S. Mint, but do we know how much silver jewelry and and silverware has been sold. I don't know if they keep track of that very well. So I think there's a lot of stockpiles out there of silver. Even if they keep track of how much is sold today, I don't think they properly estimated or kept track of all the silver that was produced over the last 150, 200 years. It's been, they like to say, well, silver just gets used up and it's gone. That's not necessarily true. A lot of silver gets recycled. A lot of silver is held on to. And I just think there's a lot of silver out there that we're not aware of and can't quantify. I don't know how much is out there, but when the annual amount of silver produced is not enough to meet the annual amount of silver demand in a year, well, then it must mean it gets picked up by existing stocks, but they don't seem to have a handle on that when they produce the reports. So it's not like a lot of people think that the cost of mining is one of the most important things. It's important, but it's not critical, at least for a year or two, or maybe even for a long time. Let's say 1 year you produced 800 million ounces of silver, and you use 820 million ounces of silver. Okay, they have to come up with the 20 million ounces somewhere else. However, let's say because the price of silver drops to like $8 an ounce, and they're just not going to make the silver, or some of them will, just to keep the mines open. They got to pay debt. So let's say silver goes from 800 million ounces to 650. That doesn't mean that the price now has to ratchet up in order to make up the deficit. As long as there's enough silver out there to meet demand, the price doesn't have to necessarily rise because you have a deficit in mining. Because especially with gold, they say there's 180, 190 million tons of gold out there. So if they don't make, if they go from 3,500 tons to 2,800 tons in a year because the price is too low for them to mine it, it's not going to be an immediate issue for the gold price. All right. So how much silver is produced each year and consumed? Well, I sent you that. Your chart that shows total silver ounces, a large SLV in lime green, is this physical silver or paper silver? That is supposedly, I looked at it today, it's 330 million ounces in that big green line. When you say paper silver, the concept of paper or digital silver is that when you buy paper silver or digital silver, you're buying a representation of a physical amount of silver. So when you buy a COMEX contract, it's different. So let me explain the two. So when you buy an ETF, supposedly you're buying a share that represents a certain amount of silver. Now, in most cases with ETFs, you cannot redeem your share for that silver, but they represent that the silver is there backing the amount that you have. So you have a paper claim on physical silver. And on the SLV case, you have to go through a bunch of hoops and hurdles in order to get it. One of them being you have to have like massive amounts, like millions of dollars worth of SLV shares. Other ETFs like Spor have a delivery option, but again, it's similar. You got to wait 30 days. You got to go through a bunch of hoops and hurdles. Central Fund of Canada supposedly also has the gold and silver vaulted. I don't think you can get at it, but your paper, when they call those paper silver, it's not the same as a COMEX contract, and I'll explain. So once you get the concept that what you have in an ETF is presumably there's silver backing your paper, even though you may or may not be able to get redemption. The case of gold money or bullion vault or digital gold, that's also a form of what you might call paper, in that you send them $100 and supposedly there's $100 worth of gold with your name on it in a pool, that if you wanted that gold, you could write to them and they would send you your $100 worth of gold. So it's not the same as when you buy physical gold. You go into the dealer, you give him $100 and he gives you $100 worth of gold. The digital gold, like gold money or bullion vault, is they credit your digital account, but you can click a button and they'll send you the $100 worth of gold. Whereas an ETF, they say it's there, and Maybe it's not, but maybe it is. But the real paper gold is when you buy a futures contract where you have a potential delivery option. In some instances, like if you trade silver mini contracts, you have no delivery option. But in the normal case, let's just use gold and silver futures contracts on COMEX. Even with the 290 million ounces that we saw, let's go back here. I don't have the one readily available. It shows registered and available, but it doesn't matter. Let's just assume all that you see there, those 200 million, maybe tomorrow night we'll do this in more detail. But briefly, those 290 million ounces are all potentially deliverable, even though some of it's not yet registered, but it's eligible in the form to deliver. However, the amount of trading that goes on around that pile of silver, as big as it is, if everybody who bought a contract wanted to exchange it for physical on the end of their contract, there wouldn't be enough. The problem is, or it's not a problem, is that most people who buy these contracts are not interested in taking physical delivery. What they're interested in doing is trading the price difference, either just because that's the game they play in order to make fiat profits. They might as well be trading pork bellies or anything else. They don't want the pork bellies. They don't want the silver. Or if they wanted the silver, they go out and buy it. So the idea that there's not enough silver to cover the contracts is correct, but it doesn't have to be, because it is a paper game and they're trading paper silver. See, people, they disparage it as paper silver. They know that. That's why they're there. It's just like saying when you go to a casino, you're only getting chips. Yeah, but you feel rich when you have the chips. You have to convert them into fiat. But the point is that when you use the word paper silver, it really should only apply to your COMEX contracts, which is paper silver with a potential ability to convert. And I guess the ETF, well, the difference is there's not a one-to-one correspondence with all the contracts with the silver that's available at COMEX, whereas supposedly at the ETFs and the mutual funds and so on, there is a one-to-one correspondence. Same with gold money, bullion vault. Clearly, when you send your gold or silver to BRINKS, there's supposedly a one-to-one. Now, Perth Mint runs a thing called a pooled account. There may not be in that sense. That's a paper. They keep enough there to cover redemptions, I believe. I'm not sure a pooled account is one-to-one. It may be, but there's different versions. But when people say paper silver, that really means anything other than holding a physical metal in your hand. It's all paper silver, but some paper silver is more backed than other paper silver, with the COMEX being the least backed, I would say. All right. Copper bullion is the future. Yes, that's right. Bob Lopina, what's the reason calling Litecoin crypto silver? How is it silver? Well, I mean, how is Bitcoin gold? It's not. I mean, a lot of crypto people, they try to say Bitcoin is digital gold. No. You see, gold, as we talked about other nights, is, and silver, just is. Doesn't improve, doesn't degrade, especially gold doesn't degrade ever. And it doesn't produce dividends. And the main thing about gold is not only do you not rely on anyone to do anything to make your gold valuable. Well, I mean, once they've mined it and slapped a design on it, and they say it's 999 and it's 1 ounce, whatever it is, then you have your gold. And Warren Buffett says, well, it's still an ounce of gold 10 years later, 20 years later. Yeah, that's right. And you don't require it to do anything. It's not going to pay a dividend, but it's not going to go away. It's also not going to default. It's not going to have a problem. It's going to be an ounce of gold 10 years from now, 20 years from now. Be there when you're gone, and when your kids are gone, it'll always be an ounce of gold. Whereas a company could be gone when your kids are gone, or it could be worth 10,000 times more. That's the difference between gold and an investment in a company. Now, Bitcoin is not digital gold. Why? Because Bitcoin isn't just Bitcoin. You can't go out and get yourself a Bitcoin and hold on to a Bitcoin. Now people say, oh, I have a Bitcoin. No, you don't. You have keys to go on to a blockchain and unlock that Bitcoin, but you don't have it. And the only way that you have that Bitcoin is if the blockchain is functioning and miners are mining and there's electricity and you can access the blockchain. So you really don't have a Bitcoin. So Bitcoin requires many inputs. Electricity, you need a device to access it. You need confirmation. It doesn't just exist the way gold does. But assuming you're going to say that Bitcoin is digital gold, then once you've made that leap, which I can't make, then Litecoin is digital silver. Why? Because Litecoin is more plentiful than gold. Supposedly a similar... Well, and the thing is, I don't even think silver is analogous to gold, other than it's a monetary metal, but it's not really close to gold in many respects. Litecoin is very, 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 very similar to Bitcoin. It's basically a clone, a little different security on it, and it's just issued at a ratio 4 times to gold. And the idea is, again, if you're playing digital fantasy, that if Bitcoin is digital gold, well, then silver is Bitcoin's little brother or sister. It's cheaper. There's more of it. You'd use it in transactions. So Litecoin could be pocket change the way silver was pocket change. And, that's the analogy. And gold and Bitcoin are the store of wealth. So that's the reason, Mr. Pina. All right. Well, I think that's it for tonight. But please remember to get your Smaulgld mugs. Mugs cannot go to zero. There's free shipping on them. You get them at smaulgld.com. De nada, Pablo. Okay. And also check out the other Smaulgld products. They're really cool. They're rare. See? Smaulgld products should be worth more than everything else because they're rare. You can get... the rarest one is the Smaulgld espresso mug. I think I've only sold 2 of those. I've sold tons of the travel mug. Of the best seller is the Smaulgld super classic mug. That's the one with the red interior. And I've sold a lot of the Smaulgld classic mugs. Would you guys be interested in? There's a guy I saw. He was on. I haven't approached him, but he's a veteran and he was selling coffee, and Facebook tossed him off of his Facebook page. And he had bought $350,000 worth of ads. I was thinking of hooking up with him and maybe selling you guys his coffee with my mugs. That might be a nice thing. But let me show you. You guys might not have seen. It's a guy named Joshua Roberts made this one. I thought it was really cool. He took one of the mugs and he did mug life. That's this picture right here, which I think is hysterical. Playing off of Thug Life. That is the travel mug that you can buy. But also, I was going to show you the best seller, which was the... well, here's all 4. I'll show you all 4. These are the... from left to right, that is the Smaulgld Super Classic, and then the Classic to the right. Those I will deliver from Smaulgld headquarters. I even throw in a Smaulgld Game Changer Eraser. Free shipping. You go to smaulgld.com to get those. The travel mug and the espresso mug at the bottom are available from the manufacturer, and they ship pretty quickly as well. All right, platinum. Now I've done shows on platinum. Not going to go into it tonight, but I use platinum more. I haven't really done an analysis lately on it, but when people try to tell me that silver is rarer than gold, or that silver only comes out of the ground, it's gold, it's only 7 to 1, or whatever that is, and they use the relative rarity argument to try to insist, because they've heard it on some silver pumper channel, that silver's gold-silver ratio should be lower, and I point out that platinum is 10 times rarer than gold, and it's not 10 times the price. The point being that relative rarity is not dispositive of price. And the other one I say is I've done 3 paintings in my life, and Picasso's done thousands, and his are worth more. Why? They're more desirable. It's the same thing with a lot of things. Just relative rarity is only one component. It may not even be dispositive at all. Let's see. Have you ever considered making a silver mug limited edition? I did, and I couldn't find somebody who would make them for a good price. I mean, even at $14 an ounce, a silver mug, is going to be a few ounces, but I couldn't get them for under $100 and some odd. I don't know if who would buy one, so I gave up on the idea. I would love to have one, but I don't know if I'd pay that much for a mug. All right. Oh, a small gold mug, yes, but just a silver mug, no. Well, thank you very much, everybody. We will see you tomorrow night.